Investor Inspiration. Thank you for having me on in the invitation with the Investathon end of the year here, and it's a pleasure to be here and to speak to everyone. First thing I'm going to do is basically introduce myself, and I'll be speaking on some trading rules that I've employed over the years that have really helped me maintain profitability. So let's go ahead and go through the intro. My name's Keith Kern. I've been a full-time trader since 2001, and prior to that I was a stockbroker. I had brief stints with Edward Jones and Merrill Lynch at the time, so I was there for a couple of years, and then I went off and began trading on my own back in 2001. And I've been full-time trading ever since. It's only been a recent advent of mine that I've started the website traderstoolbox.net. That started about 3 years ago and was basically a brainchild from or a result of social media. Like Renee said, my handle on Twitter is STT2318, and over the years, by sharing trading ideas and thoughts, I've gained quite a bit of a following, and I've enjoyed meeting everyone over there. But as a result of that, I started the website because I kept on getting a lot of the same questions from traders that were perhaps struggling or early in their trading journeys and trying to become more profitable or whatever. And I found that I got a lot of the same questions over and over and over. And finally, I started the website, traderstoolbox.net, just to basically have a blog and answer those questions. From that, just real quick, and we'll get into the meat of the presentation, but from that, I've started a live chat room. I have a nightly newsletter as well that goes out, and also chart alerts that go to your device in real time, and I pride myself in getting those alerts out prior to actionable entries and giving measurement objectives and risk objectives, and we'll go over that in a little bit. But I encourage you to follow me on Twitter, STT2318, and check out the website. All right, enough on that. Just a quick example. This is an account that I start every year with 25,000 in it. That may be small for some of you, it may be big for others. I know it's all relative, but just an example of what can be done over time with some of these rules and principles I'm going to be showing you in the next several minutes. So this isn't a brag. This isn't this isn't to say, hey, look at me. This is just basically to show, hey, this can be done. Being a full-time trader can be a career, and you can make a lot of money, and you can be your own boss. I'm just here to encourage, I guess. Over the past 15 years, I can assure you I've made pretty much any mistake that any of you guys have probably made over the years as well. Through these pitfalls, I've developed these rules, and just to keep it real, I have blown up accounts in the past, and I think that's kind of a rite of passage almost in a way, and that's why I'm here to hopefully help others on earlier on in their trading journey or the seasoned pro to maybe avoid the pitfalls that I've experienced in the past. But having said that, for every one of those pitfalls, I've had numerous successes, and I enjoy sharing in those successes and teaching and hoping that I get other folks out there to experience those as well. So moving on here, my top 10 trading rules. These are just 10 rules that I've developed over the years. I'm just going to go through them one by one, talk a little bit about each of them, and then after that go over some specific charts and some specific trades I've had in the past, and kind of show you guys what the trade idea was, why it was a good idea, what the risk parameters were, where the entries and the exits were, and that sort of thing. Okay, so just by going through these rules and then the examples, hopefully a lot of this stuff will make sense. Before I get started on the rules, I am a simple-minded trader, and that is by design. I've tried numerous types of strategies over the years. I've tried basically every overlay, high frequency stuff, algorithmic trading, technical, any indicators that you might. I've tried them all, to be honest. And what it boils down to for me is price and volume. And my trading is simple by design. I'm a swing trader, and I also do some day trading as well. So I'm kind of a hybrid trader, but a lot of my trades are swing trades where I'm holding from a period of, say, 2 days to say 2 weeks. It's perfect for folks that are perhaps working a full-time job or not at the screens at their machine 24 hours a day. So these types of strategies can work for day traders as well, but geared more for folks that are managing a portfolio, maybe a 401k or whatever, and want to be a little bit more active than just buy and hold, but yet not necessarily trading scalps all day every day. So anyways, number one, know the pattern and plan your trades. Okay, so I'm a technician, and I am trading basically via technical analysis and a chart. So you have to know the pattern that you're getting in and plan your trade. And what do I mean by that? Let's go to a specific chart, and this is one I just had actually on December 9th, a breakout pattern that I was watching prior to this move. And so what I mean by getting at knowing the pattern, okay, you need to know what your risk is on any given trade and what your reward is, right? So in this particular instance on INVN a couple of days ago, I think it was last Friday, there was obvious resistance. So this is kind of what I call a flat top breakout. Now the names of these patterns aren't important. What is important is knowing where resistance or support might be and knowing where your actionable levels are, okay? So I knew my entry on this particular pattern, the resistance was around 840 to 850-ish, okay? So by knowing my pattern, I know where my entry is, and then I know where my risk is based upon the support trend line. I don't have that drawn in here. If you kind of follow my arrow with me, you can see that support, that short-term uptrend line comes in about $8. So on this particular pattern, I know what my risk parameter is, and I know. One second. I'm getting a little bit of background noise here. All right. So I know where my stops are, and we'll go over that here in a little bit, and I know what my objective target is based upon this pattern, and we'll go over that in a few as well. Okay. So know the pattern and plan your trade. So in essence, know where your stop is, know what your reward is, and know where your entry is. And the trick, okay, the trick to becoming a profitable trader in my mind is all about having proper risks versus rewards on your trades, right? So we can be correct only maybe half the time, but as long as our reward is bigger than our risk, we're going to make money. It's simple math. And then conversely, if we're losing more than what we're making on our losers versus our winners, we'll be a losing trader. I know a lot of traders out there correct only 35% of about a third of the time and still make money because their winners far outweigh their losers. I have been a 65% person, so I'm right about 65 out of 100 trades, and that is I've literally done over 100,000 transactions over the years. So I've diaried those. I've logged those trades and done the math. I'm 65%. I don't think I can get better than that. And I find that a lot of other successful traders out there are similar. Okay, so knowing that you're right about 65% of the time, it's definitely a key to have those rewards or those winning trades outweigh your losers. Okay, and we'll go over those types of strategies that will allow you to let those winners run in a few minutes. Okay, so plan your trades, know where your exit is, know what your reward is, and honor those those levels. Okay, be mechanical with it. Number 2, stick to good daily charts. Okay, so over the years, as you become familiar with what types of patterns, or just over the period of time, what your trades are, you'll become familiar with what types of patterns are out there and what types of patterns suit you. I like to just follow charts that have obvious resistance, obvious support, and trade with those parameters. Okay, so that's the main thing. When I say good daily charts, know where your resistance is, and here's some examples. The more times we test resistance, okay, the more significant those resistance lines become. So with your patterns, know where your resistance is. Stick to those clean levels. You'll notice with my charts that I do not have a lot of overlays. I'm basically price and a volume guy, and that's, to me, is what is most important: price and volume. So we want to see resistance breaks on price with a volume expansion stick, as you can see here, and that is one of the main rules of getting into these patterns, is knowing that you have a volume expander and a price expander. Okay. Number 3, we've talked about this. Risk reward needs to be in your favor. I go into a trade, folks, asking myself, okay, what is my risk on this trade, and can I afford that loss? Okay, so that's the first thing I ask myself, and that's one of the main things that have really improved my trading over the years. Going in knowing, okay, hey, worst case scenario, what is my exit and how much am I going to lose? I know it seems kind of a little bit negative, but you go into a trade not necessarily expecting to lose, but not being surprised if that trade does not work. I tell folks that the one thing that I've accepted over the years that's really helped me out as a trader is being a good loser. Okay, basically having the ability to take that paper cut or take that loss properly and realize it's just a cost of doing business. Okay, as a trader, it's a business, and you're the CEO, right? So knowing that you're going to have losses and mentally being able to deal with it. So I go into those trades knowing what my risk parameter is and understanding, okay, I will stop out at this area, and I'm 100% fine with that. In fact, you almost want to wear that with a badge of honor, the ability to take that loss properly. I can tell you that over the years, if I could eliminate maybe a half dozen of my worst trades through the year, it's basically because I didn't honor my stops and really hit the account. If I could eliminate those half dozen trades every year, I'd be way, way, way more ahead than I am now. I've done a much better job of that over time, eliminating those types of mistakes. Okay, so knowing when to take that loss and being comfortable with it. Number 4, volume is expanding. Volume is vital. Okay, and I'm going to go over these charts one by one here after I get through the rules, and hopefully these rules will make a little more sense as I go through each chart and explain to you what the trade was and why. So volume expansion on a breakout, on a resistance type break is what's key, or a support breakdown, okay? And you can use these rules, both long and short, and the volume expansion is key on that. Number 5, position size properly, okay? Each one of us is unique as far as our trading personalities go. I like to say everyone has a different trading personality. And that's true. No two traders are alike. Okay. With my services at the website, traderstoolbox.net, I give these educational alerts on what I'm looking at and why, but I don't expect people to mimic my trades. In fact, I think if you mimic someone's trades over time, you will lose. What you need to do is just kind of understand the trade and then use those principles and those ideas to to help you maybe with your trading strategy and your trading plan to implement those and help you control risk and reward potential. But anyways, position size properly. A couple of thoughts on that. I'm a person that I don't like to lose more than 2% in any given trade. Okay, so let's just do the math. For reference here, round numbers. Let's say I have a $100,000 account. I'm a 2% person, so I don't want to lose more than $2,000 on any given trade. I'm willing to risk $2,000. So as I get into a trade, I ask myself, okay, how many shares can I buy? Okay, so let's say you have a $10 stock, and you know your stop is $9.50 on that idea. Okay, a 50-cent risk on the chart. I know how many shares can I buy, knowing that I don't want to lose more than $2,000, a 2% rule on that trade. Okay, so if you do the math, you can say, okay, so I can buy 4,000 shares there, knowing that 50 cents is my risk, and that's just kind of a nice guide. So that 2% rule is a real nice guide on basically knowing how to position size properly. Now, some folks out there are 0.5%, some folks out there are 10%. I just want my risk based on the technicals, based on the chart, to match up as best as I can with my overall 2% rule, and that 2% is just my personal risk tolerance. Okay, so it takes a whole lot of bad trades, right, with a 2% rule to basically, take a huge hit in your account if you have a string of bad luck, or you don't say bad luck, but bad trades, right? So it's a mathematical certainty, folks, that no matter how good your strategy is, you're gonna have a run. You're gonna have a run of trades that go against you, and you're going to have a string of losers. So it's very important emotionally to be able to handle that and deal with it and understand it. And that is no reason to to dump a strategy or to bail on that strategy, because if you have a winning strategy, stick with it. At some point, as a trader, at some point you're going to have a run of losers, and you have to be able to deal with that. So position size is important. All right, I get this question a lot, price versus time. Hey, Keith, as a swing trader, how long are you in these trades? And I always tell them it's more price than time, okay? So I have price objectives on patterns, and I'm going to try to stick with that idea, that trade, as long as the price is going in my favor rather than time. Very, very often time does come into play if the stock is not moving the way I think it should, but it has not stopped me out. There is that opportunity risk involved there, so the time parameter does come into play if the stock isn't, cooperating. But sometimes time comes into play there. But I'm more of a price person to let dictate how long I'm going to trade rather than time. Okay, so if price objectives are hit in 2 hours, that's fine. If it's 2 months, that's fine as well. Number 7, proper stop loss techniques. Okay, so I'm a trader that I'll enter a whole hog on my positions. So if I want 1,000 shares and the price dictates that I buy the stock, I'll go that entire 1,000 shares. I will do the same on the exits. Okay, which will lead into number 8 here in a second. But I will do the same with my stop loss. I will not scale out. I will get to the point where, hey, the price is stopping me out. I just get out the entire position. Okay, so that's what I mean by proper stop loss techniques. If you're a trader that's not able to push buttons all day long, make sure you have stop limits with your broker, that sort of thing, so that they can mechanically execute as well. Which brings me to number 8, the trim and trail technique, or sometimes called the scale and trail. And again, folks, I'm going to go over all these with a lot of chart examples here in the remaining time, and then I'll take some questions. So we like to with the exits hopefully on a winner, right? We try to manage those exits in a way that allows for you to maximize your gains. I'm going to show you some examples of that as well here in a moment. So keep in mind, if I'm stopped out on the downside, I'm out entirely. If a stock goes my way, which happens about 65% of the time, like I mentioned earlier, I like to use a trim and trail and like to exit in about 3 pieces. And I'll go over that here in a moment. But what that does is it allows you to decrease the risk as the stock goes in your favor. It allows you to pay yourself. And then thirdly, it allows you to take advantage of the potential home run to let that winner run as long as possible. And I'll show you what I mean by that in a few. Number 9, don't hold through catalysts. So as a swing trader, I avoid any type of catalyst, whether it might be an earnings report that's coming up, might be let's say a biotech company, it might be FDA data, like a phase 3 data point coming up. Maybe it's litigation in a stock. There's a court case ruling coming up. Whatever the case may be. Maybe it's a sector catalyst. Maybe if you're in GM, Ford has earnings tomorrow. Maybe you don't hold into that because it'll affect your play. At the very least, with the catalyst, I like to, if it's a winner, maybe decrease the position and let just a little bit go. But I'm one of those types that like to avoid catalysts. That way I don't have any negative surprise. A lot of these catalysts are lotto tickets, meaning you just don't know unless you have some sort of an edge. If you've done some research, or you might have some intimate knowledge of, a situation where you think you might be smarter than the market on it, whatever. But for the most part, 99.9% of the time for me, I'm not holding into these things. Just a good rule of thumb, because I've been burned numerous times by trying to hold through, say, earnings. Number 10, don't ever average down. This is key. The anatomy of a bad trade, at least for me over a while back, is all right. You go to buy XYZ stock at $10 breakout. It immediately goes against you. You think, okay, this thing has to go higher. Next thing you know, it's $9.75. You're adding to your position. Now you have more stock than what you meant to own, and it's a loser right now. So now what you're doing is you're adding a position size to a loser, and that's a no-no. It may seem silly, but this happens to a lot of traders out there. So now you own double what you wanted to own, and it's going against you. Next thing you know, it falls even more, and your stop that you had in place is long gone. You're guessing, you're praying. Once you start praying on a stock or hoping, my suggestion is just to get the heck out of it. It's an opportunity cost. Maybe you get lucky. Maybe that stock does rebound, and you get back to break even and you sell, and you're thinking, oh, thank goodness. But that is no way to trade. Okay. Don't average down. If the stock goes against you, accept the loss, move on, knowing that, okay, my strategy works over time. I'm looking for that next trade, and it's just time to move on. It's an opportunity cost there. It's the cost of doing business. Accept it. All right, bonus rule on number 11 is cut the noise. Speaking of social media, like I did before, that's one downfall of social media. Say 9:30 Eastern rolls around, the market opens, and you see other folks making 1,000 trades and making $1 million, right? Well, what happens is that tends to seep in. You have the fear of missing out on a trade, or you're jealous that other traders are making money and you aren't. What I'm getting at is cut the noise. Know your strategy. Know that your strategy works. Try not to let other trades or other traders interfere with your mindset. Okay. I like to think that you can trade in a vacuum and make money, right? You don't need to know what other traders are doing all the time. Don't let that affect your decisions. Go in with a plan. Excuse me. Go in with a plan. Know what your plan is, and stick to it, and cut all the other noise, right? Maybe CNBC, maybe cut that off. Maybe cut Twitter off a little bit, but just stick to your your objectives, be disciplined, and stick to what you know works. All right. So those are some good principles, some good rules to trade by. Now I'm going to go through several charts, give you the trade idea, what I was looking at, why I took the trade, what my risk was, and go from there. Okay. Following that, we should have a few minutes for some questions, and I'll take the questions in after that. All right. So back to unbiased, trade I had a couple days ago. These are fairly recent trades. This was a chart I was watching for an 840 break. You can see it by the simple blue resistance line. And so again, what I'm looking for are price breaks of resistance with volume that is expanding. Okay, this is one mistake I think a lot of traders make out there, is they're looking for so-called breakouts, but they're not really paying attention to the volume. I can't tell you how many times I see breakouts not work, and 9 times out of 10 it's because the volume was not in existence. It wasn't present. So what do I look for? Look for this price breakout at 840. What is my target? Okay, so if you can follow my maybe I can use this here. There we go. If you can follow my pointer here, what I like to do is I like to take the depth of the pattern. So in this case, it's about $7, and my breakout is about, let's say, $8.50. Okay, so what is the math there? The depth of that is about $1.50. So that generically gives me, if I tack that on, $1.50 to $8.50 gives me a target of 10. Okay, this is not foolproof. This is just a guide. All right, so in this pattern, my target is 10. All right, why is that good to know? Well, that is my reward, potential reward, $1.50. What is my risk? What I like to do is, let's see here. What I like to do is, let me get back here. What I like to do is use the short-term uptrend line as my risk parameter. So if you can kind of see this line right here, okay, as I mouse up, that support trend line, the short-term trend line gives about an 8, comes up to about $8. So I know my risk is about 50 cents. My reward is $1.50. It's a 3-to-1 reward to risk ratio. Okay, so if I'm wrong, I'm going to lose about 50 cents. If I'm right, hopefully I get about $1.50 on that. And what our job as traders is to do is consistently get ourselves into trades that offer favorable reward versus risk profile. Okay, simple as that. Know what your risk is on the trade. Know what your reward is on the trade. If it's in your favor, go for it. You know, I'll get into trades that are maybe 1.5 to 1, 2 to 1, 3 to 1. The higher the better. Okay. So that was my trade idea on that. Let's go on to the next slide here. Here's another trade example I had from not too long ago. PACD. Okay, I know I liked it through 450. You can see that upon the breakout, the volume was expanding, so that was a green light there. What is my risk on this trade? Okay, was this uptrend line? Okay, this uptrend line. See that? If you follow that up, it's, you know, so my risk was about, let's say that line comes in about 4.25, so I have about a 25-cent risk, and the depth of the pattern, right, 3 to 450, about $1.50 move gives us me a reward of about $6. Okay, so a $6 reward, sorry, a $1.50 reward with about a 25% risk. What's the math there? I don't know, about 5 to 1 or so, 6 to 1, whatever it is. You know, it was a good opportunity to be getting into that trade example. Okay, so you can see the line a little bit better on this. So I have another trade idea here. This is from earlier this year. The break was 15.5, and as you can see, this trade didn't go in my favor immediately. So I kind of wanted to show you why I use the support levels I do for my risk parameter. So you kind of see this pattern is kind of a cup and a handle looking thing. I could see the resistance at 1550. It broke out the 1550 area and the volume was expanding, as you can see down here in the circle. All right, so it was a green light for me. The trade was entered. Now, I knew my risk. The downside was this short-term support line, right? So I drew that in there, and you can see it upon the breakout. It moved a little bit and then it pulled back to support. Okay. This is also another trade strategy. Actually, if you don't want to buy breakouts, buy the dips after the breakout. So what you could have done is, maybe bought this dip back to support, had a seriously tight risk parameter there. So if it didn't work immediately, almost you could have gotten out with very tight stops. I know a lot of successful traders that buy the dip rather than the rip, so to speak. But anyhow, that was my risk. Was in this case, I could see my support trend line about $15, give or take a few pennies, right? My entry is 1550. The depth of the pattern, let's say, it was about 14 to 1550, gives me about $1.50 to the upside. It's about a $17 price target. The risk was $15, about a 50 cent risk on that trade. Okay, so again, not to belabor the point, but I know what my reward is, I know what my risk is, and I just go for it, all right? Eliminate all the noise, be mechanical as possible, make sure the volume is expanding, and boom. So if you like these types of patterns, this is what I put on Twitter, STT2318. I put these on Twitter day in and day out. I think that's why I have so many followers, is people like the ideas. I put these on prior to the breakout, so so you can help develop a watch list. I have, my nightly newsletter. If you sign up for the service at the website, tradertoolbox.net, I put out a newsletter, basically my 10 favorite setups going into the next day, so you kind of see my watch list and give you my thoughts on the overall market and that sort of thing. But that's what I do on Twitter and in my newsletter for the service. And then what I also do, folks, is I send out the alert to your, whatever device it is that you want to get the alert on, whether it be a text message or an email, whatever. If I'm watching a stock and looks to me like, has potential breaking out, the volume parameters there, I'll send that alert out saying, hey, I'm looking to buy XYZ stock on that $10 breakout. And I send these out prior to actual entries. And then what I do on those alerts is, okay, my risk parameter, my risk is this, my potential measurement reward is this, and here's what my entry is, and you can do what you want with it. Okay, so that's what I do. Day in, day out, all day, every day. All right, next slide here. Here's another trade example. Okay, had a nice resistance area at 375. You can see the support area. This uptrend line. Okay, came in about 350 upon the breakout. You can see the volume was expanding. And the measurement, okay, about the depth of the pattern, about 275 to 375, so, about 75 cents to $1. So I'm risking about 25 cents here to make about 75 cents to $1. And you can see that this trade, in fact, worked as well. I'll skip over a couple because I want to be able to take some questions here. The trim and trail rule that I mentioned prior a little bit ago. I want to kind of go over that on the exits. You know what the measurement is via the pattern, but what I want to go over is how I do that trim and trail if the stock does in fact go in our favor. So what I like to do is I like to sell in 3 pieces a winner. You don't have to be 3 pieces. If your account's smaller and the commissions start adding up, I understand that. Maybe you can do 2 pieces. I like to use 3 pieces, and how do I do that? So as the stock breaks out in my favor, I like to sell a third on that initial thrust. A lot of times, as you'll get to feel this as you trade these patterns. That initial pop, this is more of an art versus science on the initial pop. I like to say, trading is a lot of art versus science. You got to have the science behind it, obviously, in your strategy, but then the art comes into it as well. But a third, I like to take off on an initial pop. So if I'm buying a breakout of 30, maybe a couple days later, I've got to move to say about 31, 32. I like to take a third off. What does that do? It decreases my risk. It pays myself. and it allows me to ride, for that potential reward as well. So the second piece I like to take off is that objective target based on the chart. Okay, so we've been going over those, how I find those targets with the pattern measures. So the first piece is that initial thrust, the second piece on the objective target, and then thirdly and lastly, I like to ride those. I like to ride that last piece up as long as possible. Okay, and that's where the short-term support uptrend line comes in play, and ride it as long as possible and stop that final piece upon that break. Okay, that's the trim and trail, kind of going over that quick. By the way, all of these strategies and tactics I'm speaking of, I do have a course, the website, traderstoolbox.net. I have 12 hours of live classes that I've recorded and a textbook that goes with it. My email, if anyone wants to email me, info@traderstoolbox.net. I can answer any questions on that. I do have an education course that hundreds of people have gone through, and I take a lot of pride and joy in that course. If anyone's interested in that. So that just kind of goes over and beyond, these types of webinars, which are fantastic. These Investor Inspiration, they do a great job of educating. If you just want to learn more about what I do, so you can, that's another, check the website out and have more opportunities over there with my strategies. So lastly, I'm not going to go over any more of my website items. If you have any questions, just email me. But what I'd like to do now is, Renee, is take any questions I might have. With what, about 5 minutes we have remaining, if there aren't any questions, that's great. But I'll be more than happy to answer as many questions we can fit in here.
On the control panel on the side, you can click the little arrow next to questions and it'll show them for you.
All right, bear with me, folks. Arrow next to questions here. All right, let's see here. Okay, great, got them. Are these all for me, Renee? Or these? Okay, I see the time now. Never mind. Okay. All right, if any questions, folks? All right, question. How can you work on stop loss price action, method to find stop loss for a stock? And I think I answered that one. I use my stop loss basically by utilizing these uptrend lines, so I know when I'm getting into the pattern. You can do this on the flip side too, to short a stock, use the resistance downtrend line. And then, if I hit buttons because I'm a full-time trader, but if you're not, I would recommend a stop limit order. And if you have questions on that, I encourage you just to call your broker and let them know what you're trying to accomplish, and they'll tell you the best mechanical orders. Our next question, volume. Do you look at the average line, like 50 SMA, if it's above, it's increasing? Yeah, so I get this question a lot. How do you know if volume is expanding? And that is a good way to do it, especially if you're not around a machine all day long. I use my eyeballs and kind of gauge it by that. But what you can do is you can put a moving average over the volume, kind of like a moving average on a price. You can also use a moving average, rolling moving average for volume. So I'd like to use like I would recommend a 10-day, maybe a 20-day moving average on volume. And so you can kind of gauge the volume as a percent of that moving average, just kind of give you a mechanical way to figure out, hey, is the volume expanding or not? You can also use your eyeballs by looking at a chart. It's usually pretty obvious. All right, next question. Let's see here. How are you finding the daily trades? What program are you using? Can I get on your mailing list? Sure. So I use I actually use TC2000, Worden.com, and I actually have it right here. So you can this is the scanner I use. Here's actually a nice breakout I had today and yesterday. But anyways, there's a scanning ability real time on here, and you can basically, what I'm doing is I'm looking for stocks and uptrends, and by I use moving averages, in my formula to decide whether stocks and uptrend. Then what I do is I just flip through a lot of charts. Okay, I flip through probably 500 to 600, maybe even 1,000 or more a night. And that's what I do on my website and in my nightly newsletter is I scan through those on my own, or even on Twitter. I do have a free newsletter that I put out on the weekends, and you can sign up for that at the website. But this is the scanning software that I use. Okay, there's so a couple more questions, and we'll turn it over. I want to thank Renee again and Investor Inspiration for having me. It's been a blast. I really enjoyed doing this. So I'm interested in swing trading, as I can only trade 1 to 2 times a week and keep a super observant eye on the market. I also only have a small amount of money to start trading. What are ways to get past the 25K restriction? So what you can do, some ideas to get by the 25K restriction. If somebody don't know what that is, it's the pattern day trade rule. Basically you can have just a cash only account. Don't use your margin and turn the margin off. And then also you can smaller accounts, you can utilize options on on some of these patterns. If some of these patterns, okay, are with big caps, liquid names, they oftentimes have options you can use with your trading. And with options, it's next day settlement instead of 3-day settlement, T+1 rather than T+3, and that's another strategy as well. Something to think about. Do you trade the same group of stocks, or are they always different? So that's a great question. So what I do is, folks, is I look for certain patterns, okay, to trade rather than groups of stocks. So my watch list is constantly revolving. So I'm looking for patterns that fit the rules rather than certain groups of stocks. All right, looks like my time's up here, Renee. I thank everyone again for being here. Hopefully you can take a nugget or two out of this to help you be a better trader. Appreciate the opportunity to speak with everyone.